Hey everyone, welcome back to Corporate Decoder, the place where we decode the complex world of business and finance with a smirk and a knowing wink. Today we are diving into Zai Lab Ltd's latest report looking for nuggets of gold hidden within all the corporate jargon. Before we dive in, if you love getting straight talk on these lengthy EC filings, make sure you are subscribed, and hey, we have a fantastic Discord community linked in the description below where we discuss these insights further, so join us there. So what is Zai Lab Ltd up to? Well, it looks like they have been busy securing some financing. They have entered into a guarantee contract and a credit line contract with Industrial Bank Co Ltd Shanghai Gyubei branch. Essentially, this means they have set up a way to borrow up to 300 million renminbi, which is about 42.1 million US dollars. This money is for their wholly owned subsidiary in China, Zai Lab Shanghai, to help with working capital needs, which is essentially the money a business needs to run its day-to-day operations. This credit facility is available until May of 2026. The specific terms, like the exact amount they borrow, the length of the loan, and the interest rate, will be detailed in separate documents. But here is a key point: each individual working capital loan is expected to last for 1 year. The agreement has some standard clauses, some of which require Zai Lab Shanghai to get permission from the bank before doing certain things that could impact their ability to repay the loan. This includes big moves like mergers or selling off parts of the business, or even taking on more debt. Now let us talk about the specific agreements. We are looking at an unofficial English translation of a maximum amount guarantee contract. This is where Zai Lab Ltd, the parent company, promises to cover the working capital loans for its subsidiary Zai Lab Shanghai up to that 300 million renminbi mark. Think of it as the parent company saying, if our subsidiary cannot pay you back, we will. Then we have the line of credit contract. This is the actual agreement between Zai Lab Shanghai and the bank, detailing the parameters of the credit line. It outlines the conditions under which Zai Lab Shanghai can borrow money and the responsibilities they have. It's important to note that as of this filing, Zai Lab Shanghai had not yet borrowed any money under this new facility. This is still in the setup or readiness phase. Looking at their stock, Zai Lab Ltd has American depository shares trading on the Nasdaq Global Market under the tickers LAB. They also have ordinary shares listed on the Stock Exchange of Hong Kong Limited. This filing does not contain any new financial performance numbers or deep dives into their profit or loss, and that is because this particular report is focused on a financing event, not regularly scheduled financial updates. So what does this all mean for Zai Lab Ltd? Well, on the surface, this is a positive step. Securing a credit facility shows that the company is proactively managing its financial needs and has the confidence of a financial institution like Industrial Bank Co Ltd. Having access to these funds denominated in renminbi is particularly strategic for their operations in mainland China. It likely means they can manage their local currency obligations more efficiently and perhaps gain some advantage from local currency financing. However, let us look a bit deeper. This is not a report on revenue growth or profitability, it is about accessing debt. While debt can be a powerful tool if used wisely, it also adds to a company's financial obligations. We need to remember that this is a guarantee and a credit line. Zai Lab Ltd is essentially leveraging its financial strength to support its subsidiary. The real test will be how efficiently Zai Lab Shanghai utilizes these funds when they do start borrowing, and how effectively they manage their repayment. The covenants mentioned in the contract are also worth paying attention to. Requiring bank consent for mergers, spin-offs, equity transfers, or significant debt increases means that the bank has a vested interest in Zai Lab Ltd's overall financial health and strategic decisions. This is quite common when a company takes on significant debt, but it does put some constraints on the company's flexibility to act quickly on new opportunities or to restructure. In the grand scheme of things, this filing highlights Zai Lab Ltd's focus on bolstering its operational capacity in China. With pharmaceutical and biotech companies increasingly looking towards the Chinese market for growth, this kind of localized financial infrastructure makes a lot of sense. It is a sign of maturity and ambition. But here is my take. While securing this credit line is a good strategic move, it is not a magic bullet. The real story will unfold in how this debt is utilized and managed. Are they using it for sustainable growth initiatives, or just to cover short-term operational gaps? The market will be watching their execution. There are always risks with debt financing, and while this particular facility seems to be on favorable terms, we must remember that interest will accrue and repayment is paramount. Overall, Zai Lab Ltd is demonstrating a calculated approach to its finances in China. They are building the necessary infrastructure to support their growth. The strength here is their strategic foresight in securing local currency financing. A potential weakness is that debt always comes with obligations, and the covenants add a layer of bank oversight. The opportunity is clear expansion and operational efficiency in a key market. The risk lies in execution and repayment. Alright, that is our breakdown of Zai Lab Ltd's latest filing. What is your take on these financing moves and what they signal for the companies? Future, drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.